Is Bitcoin setting up for a big move or is it setting a trap? As Bitcoin tries to validate an RS flip at 69K, we've got conflicting signals that indicate that things might not be as clear as most traders think. Guys, it's Keith Allen, and hope everybody had a good weekend. I'm glad to be back here and glad to see Bitcoin consolidating above 69K. The question is, can it stay here? And of course, with an FOMC rate decision coming on Wednesday, not that anybody's expecting a rate cut or a rate hike at this time. We do have Fed Chair Powell's comments scheduled for that afternoon, and that obviously creates opportunities for volatility. Very similarly to what we saw last week, you can expect another round of killer whale games coming to provide some volatility and potentially set a trap as as for those hopium-based traders who seem to have gotten wrecked before. Obviously, short liquidations in jeopardy to the upside, late longers in jeopardy to the downside, and the game seems to be just to go liquidate one, go get the other one, and repeat. So let's take a look at the charts. We're going to look at the good stuff. We're going to look at the bad stuff, and see if we can identify what we need to be focused on as we move into the week, through the week as things develop, right? So let's start with the candle chart here. And you can see that we had a bit of volatility here towards the end of the week last week as things first started moving upward. And as we got into more of the economic numbers, things started to break down. But I think there was just a little bit of help from those predatory killer whales that I mentioned previously. So the problem with what we saw last week is that we had price moving up here. We cleared that 69K. That's the 2021 top. That's an area that we've been watching forever, right? Since March when we first interacted with it. It was the all-time high for over 2 years, right? So it stands to reason this is a difficult level to break. And each time we've attempted, we've had a breakdown. Well, it looks like things broke down, but began to rise back up after finding support here at the 21-day moving average. This is important, and I'm going to show you why here in a moment, right? But after more of that economic news came in, we had the unemployment report, which had a 4 handle on it, which I thought by itself, kind of out of context, would lead to a pump. However, the problem was the data that surrounded that really was kind of conflicting and contradictory. Whatever the case is, it's not looking great economically in terms of interest rates and potential soft landing talk. Not going to focus this discussion here around the economics of it. Of course, we have Fed Chair Powell coming up later this week and plenty of economic data to look at later this week. But right now, I want to look at these candles here and this green 21-day moving average, which as of today has crept its way above that 69K level. This is really, really important, right? Now, you do see it is rolling off the top a little bit here. So depending on how things develop through this week, is this going to stay above this line or get drawn up further, or is it going to break down? We are like literally teetering on it right now. Let's see where it sits. And of course, this number is going to be a little bit different from exchange to exchange, but right here, it's at $69,015. I looked at it earlier this morning and it was at like 69,000 or 68,998, right? So we've been like right at this line here at the moment. So we'll see if that obviously, what direction that goes. But what I'm watching for, right? So this is this candle on Friday was bad. The news broke down and we broke through that 69K level and also broke through this 21-day moving average, exposing weakness in both of those, right? So that's not necessarily a good thing. But these candles that moved up and have so far stayed above are positive signs here. No wicks below. We're trying to validate this RS flip here, and maybe this is the week that it happens. The fact that we got a weekly close above it is above 69K is good. We closed yesterday on the weekly at 69,640. And so that's a positive sign. The bad news on that one is that we have this pending tentative, if you will, trend precognition signal, which basically suggests that we're not likely to go higher than 72K here this week. Of course, that can change. This signal is not validated until this candle closes, but it would take a pump potentially that liquidation hunt to go after liquidity up that high to invalidate that signal. And that's certainly possible. We saw it happen last week, the same way. So that's something I'm looking at very, very closely here. Now, let's get into some more of the positive news, if we could. For starters, ETF inflows. Not only was like up wrong chart. That's economic data. ETF inflows. Not only have they been solidly positive here for the past, I don't know, 19 consecutive trading days since back in since May 13th, it looks like. We had some serious volume last week. In fact, that volume last week, according to Cointelegraph, and actually, I think there was somebody else quoted in this article that basically said, come on, let me have it. I want to show you this article. Basically says the volume here, that's not working out for me. I'll just break it down for you. Quite simply, the volume is about 8x the volume over the last 2 weeks on ETF flows. And we talked about those 19 consecutive days. The volume on those 19 consecutive days is a little more than 8 times the volume of new Bitcoin supply available for miners over that same period of time. So you remember back in February when things were really pumping like crazy and we were 10 or 12x daily demand or daily supply. That number's backed off a bit, but it's still very, very high relative to the supply. And of course, we're just talking about U.S. demand. That doesn't factor in Hong Kong. That doesn't factor in Australia, who recently launched ETF products last week. And we know that there are other jurisdictions planning to do the same thing. So ETF demand remains high, and that continues to help keep price elevated in this range. One of the common questions I'm hearing is, if all this ETF inflow is so high, how come price isn't breaking through to new all-time highs? Very, very simple. There are plenty of willing sellers above 70K. What do those guys know that you don't? Well, that remains to be seen. Maybe they're just trading the range, or maybe they know that a bigger breakdown is pending. Okay, so these are all positive signs that we have this flow. It's positive that we have price above the 21-day moving average, and it's positive that we have price above 69K. And that we have 3 consecutive daily candles currently. If this one holds above 69K, that's all positive. And we're on this trend. Of course, Powell going to speak on Wednesday, and if he's dovish, that could help keep things moving up. Now, let's talk about what is maybe not so good, right? Where's the weakness? And the first thing that I notice is that some of the support that we had here at 69K is fading, right? It's degrading down here. And that's not a positive thing at all, right? That's typically an indication that things are going to, potentially break down further. And there's just not really a lot here. Sure, we have some laddered bid support in here, but not a heavy concentration of it. And really, it's not heavy. It's not even heavy all the way down to 60, if I can be completely honest. So I don't think that we're necessarily going down there yet. Sentiment doesn't seem to be there yet, but 65 still a target. 69 you really want to see hold, but I just have some concern over the fact that we have some fading here. Let me zoom in on this a little bit and see if it's easier. I can highlight it for you guys a little bit better than what we're seeing right here in fire charts. Of course, whales buying here, but these purple whales buying, positive sign here at a consolidation level. And if this holds, right, then this is a great place for the next leg up, right? This would be fantastic. I've been saying this for a long time. I've been saying this for as long as we've been interacting with this range. I've been saying that I would like to see the consolidation up above 69K. Let's consolidate here for a while and then go after this. And then we can shoot up for price discovery mode, right? But this, anything down here, this was just a really wide range, nothing really well established yet. We started to consolidate here higher above 67. This started looking good. And now if we can RS flip this, validate this RS flip and start consolidating above 69K, it's even better. It wouldn't be horrible if we faded back to this 65K level, 65, 66, but obviously 69 there's a lot of significance about that around that 69K number. So back to the weakness, lots of selling from all other classes here. Purple whales buying, maybe that's related to the ETF demand, but the fact that this is thin here is a concern. What's this level? 8.7 million, another 9.5 million. Okay, so there's some bid liquidity here, and this could certainly hold, but it's also thin enough that it can get broken very, very easy. These moves right here, this liquidity getting pulled and moved up, this is the same game we've seen before, right? So this is just whales trying to bait in some more, in my opinion, anyways, right? Whales trying to bait in late longs. There's a pile of shorts above 71K in jeopardy of getting liquidated. And so this would pile in some late longs that they could go up, liquidate those shorts, and then come punish these late longs. All right. And that could happen right up into Chair Powell's speech on Wednesday or somewhere abouts. Whether this holds at 68 or not remains to be seen. We've got some strength around this 68.5, 68.8 level. But again, you can see where it's getting a little bit softer. And so, sometimes it gets softer because the liquidity is moving up. And same thing with the bid side. I mean, with the ask side, maybe it's softer because it's moving up or moving down. The net effect, though, when it's all said and done, is when the area thins out, it's easier to penetrate. And so that's what we have to watch out for. Ultimately, if we keep wicking up into these 70s, then that helps us. That helps us thin out this area and makes it easier to start doing battle up here with the bears that have been holding this down. But in the meantime, you've got strength. You've got strength above 71.5 up to, all the way up to 75, to be honest with you. But really heavy concentration right here, 71.5 to 73, heavy duty stuff in here. Very difficult to break without some help, right? And sure, we could have a roof pull. We have a dovish Fed on Wednesday, then things could change. But in the meantime, look, here's another illustration of where things thinned out. Look, a little left from here, a little bit left from here, a little bit left from here, a little bit left from here. And so I want to see more. I want to see the bid side brighter than the ask side. And that's when it will be my indication that things are going to move up with confidence, right? Up until that happens, I think that we're just ranging. Whether we range above 69K or below 69K remains to be seen. This is the critical level to watch. Really, I think what I'm looking at is, and the fact that these are here at the same level right now, there's confluence between the 21-day moving average and that technical level of the 2021 top. It's perfect. A wick below this is quite frankly and quite simply a sign of weakness that we could go lower. That's what I'm looking for. Hope that helps you out. If you have additional questions, feel free to share them with me in the comments. I'm always down for engaging with you guys. I appreciate the support you guys have been showing me as well. So if you appreciate or like these live streams, I should say, do me a favor, smash all the buttons. If you're watching live, you can comment on the YouTube version. We're also obviously streaming on X as well. I'm not sure the live comments are working on that side, but you can always do that on YouTube. Always a written description on YouTube as well, a written analysis, and I will add that written analysis into the X here after the stream is complete. And of course, links to the tools like fire charts, etc., are also in the written analysis on YouTube. Gonna wrap it right there, guys. Thanks again for the follow and the support. If you like this stuff, please smash all those buttons, especially the subscribe button, so you can help me grow this channel. Appreciate you guys. Have a great week and trade safe, my friends. Trade safe so you stay in this game for the long haul.